Well, good afternoon, traders. And we've seen the Reserve Bank come and cut rates by 25 basis points. I don't think it's going to surprise too many out there in the market. This was very well telegraphed. Dr. Lowe had given us some fairly clear defined guidelines by which they were going to come and ease the cash rate. We've seen that slight deterioration in the labour market where the unemployment rate's ticked up 30 basis points from the lows to 5.2%. We've seen inflation continue to be soft, wage pressures around 2.3%, really won't infuse them too much. And we're going to see a GDP print tomorrow, which will be around between 1.6 and 1.8%. You're looking for the lowest levels of growth there since Q3 2009. And of course, that's something they don't know yet, but that's pretty clear that the probability sits in that camp. And so they do need to get in front of the curve to an extent. I don't think this 25 basis point cut gets them in front of the curve, and I think it sort of just tracks where market pricing has been. But certainly the conditions by which Dr. Lowe had given us have been fulfilled. Now, what we had been looking at is certainly we weren't looking for too much of reaction from the rate cut. As I say, it was 100% priced in. What we were looking at is the dovish pricing structure that was across the swaps curve and across the interest rate curve. And prior to today, I mean, we'd seen about 70 basis points being priced in over 12 months. The market was looking for close to 3 rate cuts. So do we get the rate cut, and does the statement therefore justify 2 more rate cuts coming through over the 12-month period? Now, if you look at and you read the statement, it probably doesn't necessarily give us that level of clarity we're looking for. Now, of course, they said that they will continue to monitor developments in inflation, what's happening in slack in the real economy, what's happening in the housing market, and of course, what's happening in labour market trends. And if sufficiently needed, they will look to come and revisit the cash rate going forward. I think the market's already made up their mind that, yeah, they will have to look to lower the cash rate again, perhaps in August, perhaps even in September time. But certainly the market is of the belief that, this is a fairly wishy-washy statement. There's nothing really new in it. There's no real meat and substance that we can dig our teeth into. And we will have to look at this whole raft of RBA speakers who are going to be speaking over the next month for a bit more clarity. In fact, a bit later today, we've got Dr. Lowe himself coming out to the podium and giving us potentially a bit more clarity about this statement, and we probably might get some more meat on the bone there. So the market has made up its mind as to what's going to happen with Aussie rates, and certainly that's the case in the US, where the Federal Reserve are certainly expected to come and cut rates probably in that August to September window, and should be fairly aggressive in that easing cycle according to market pricing. A lot of that, of course, is down to what's happening in Donald Trump and his fairly aggressive foreign policy with China, with Mexico, and potentially other countries further down the line, and potentially everyone's saying that means that the US is actually the issue here, and it's not China or Europe that we should be concerned about. It's actually the US economy and the issues that Donald Trump has been raising. And that could obviously filter through into semantics and tighter financial conditions here in Australia. But I think as we go through, we'll be keeping our eye firmly on what's happening in auction clearance rates. We now have confirmation of the holy trinity of housing stabilisers. Of course, we've got APRA coming out with their easing of macroprudential lending standards, and that's sort of potentially going to resonate quite strongly with increased borrowing capacity from borrowers there. And then, of course, you've got confirmation now that the central bank are prepared to ease, depending on how much is going to be passed on. I think ANZ have already come out and suggested they're only going to pass on 18 basis points. I mean, the banks have been working independently, and of course there's fairly fierce competition from the banks at the moment, but it will be really down to how much they pass on. And of course, this is not going to be the last reserve cut in terms of the market size there. In terms of the reaction from the Aussie dollar, we saw Aussie going from around 69.76, popped up to 69.70 or 69.93. So a very modest pop in the Australian dollar. We thought there was probably going to be a bit more juice in the tank, and it might have a little peer across the 70 handle. That hasn't been the case. We've seen traders looking to sell into that rally, and I think that remains the trade out there. As long as there's global trade tensions playing through, I think people will be looking to sell rallies, and specifically against the yen and against the Swiss franc. If you look at the bond market, of course, everyone's been focused on the declines we've been seeing in yield, and Australian government bonds have really led this rally that we've been seeing in global bonds. But in terms of the front end, if we have a look at 3-year Aussie government bonds, we saw that move up about 2 or 3 basis points, and it's come right back down. In fact, as I talk right now, we're seeing the 3-year slightly lower than where we were, and that's a really interesting situation. We saw them coming out. The statement didn't meet the dovish pricing structure across the curve, but yet we're seeing lower yields. And I think that just gave everyone an opportunity to buy into that slight sell-off we saw there. We'll have a look at what happens with cash rate pricing at the moment, but I think we do have to continue eyes watching what's happening with some of these Reserve Bank speakers and whether they give us a little bit more clarity as to what exactly are going to be those trigger points. But then we need to allow the economy to evolve. What's going to happen with auction clearance rates? What's going to happen with the demand for credit? And ultimately what that means for interest rate pricings and then rates market. But certainly, we have been a little bit surprised by the lack of strength in the Australian dollar, given the dovish dovish pricing and ultimately what we've seen from the statement today.